today I'm so excited. I am with Randy Bristol of Direct Lenders. He's the owner of Direct Lenders in Kennesaw, Georgia. So Randy, today we're going to talk about lending in the current market versus the perceived market.
Thanks for inviting me. I really do hear a lot about what people are thinking on a daily basis about, people have a perceived impression, I think right now, that this market is a bubble and that prices are increasing too quickly and that, maybe they're going to get stuck with the hot potato and it's going to be, their house is not going to be worth what it was when they bought it, 6 months from now. And I think that a lot of people have PTSD that are in the market right now from, say, 8-9 years ago.
Right.
And the market really corrected. And everybody thinks that that's something that's going to happen again. I think it's almost like my grandparents back in the 40s that thought that the full-on meltdown of the markets was going to happen again, and they were scared of banks.
Right.
It's the difference is right now, and there's some really big differences. One of them, I think, is that the Atlanta market, first and foremost, we lend in all other states in the Southeast. The Atlanta market is very behind in house prices versus income. And so therefore, when people see what the Atlanta home prices are, they don't care when they're moving here from, say, Texas or Colorado or Utah. They see these home prices and they say, yes, I'll pay up. That's not a bubble. That just means that our economic conditions are actually behind what other people's are. The other thing I think that's a big difference right now is that all of the home corrections that have went on in pricing has always come from foreclosures.
Right.
Foreclosures are not in the market right now. We don't see anything. That the people that are buying houses right now are the most financially strong people that we've ever seen. And a lot of them are cash buyers. So you're not going to see a foreclosure pressure that's going to actually pull this market down.
So let me ask you a question. When we're in a bubble market versus no bubble, what causes a bubble?
The bubble is generally caused by people, if they feel like they're overpaying and a foreclosure, an event happens that causes people to get foreclosed on. So you dump foreclosed properties on the market that banks will sell just to get them off the books. And
Okay.
that means they're undercutting the market and the house prices that were out there.
Right.
You don't have foreclosures, you're not going to have a correction. And we do not see foreclosures. Right now, a lot of people are scared of the forbearance market that's about to come back on the market. They know that, about 5% of the homes that are out there, people are in forbearance. What really, the government they caused that problem. But then again, they almost kind of self-corrected it and they don't realize it. Maybe, I don't think they realized it. They made people, if you are currently ever had your home in forbearance, you cannot buy a house until you've made payments on that house for 6 months after the forbearance.
Okay.
Or people are going to have to come out of forbearance. They're not going to let their house get foreclosed on. And then they're going to have to make payments before they can sell their house to be able to buy another house. So we have this forbearance thing that's going on. It's going to keep going on because these people can't put their house back on the market right away, right when forbearance happens.
Right.
We're going to still have this pressure kind of created by the government. But once these houses do start to come on the market, they're not going to sell them short. They're going to be in the market to make money like everybody else.
Right.
So I think that it's a good time. If anybody is currently waiting, saying, I think I'm going to wait for 6 months, I believe that they're going to pay 10% more for that house. If it's a house that's a $300,000 house, in 6 months, that house is going to be $330,000. And we're seeing that very consistently right now. And we believe all of our market analysis is saying that this upward trend is going to go through 2025.
So the National Association of Realtors chief economist is also saying the same thing. He's saying we're
Oh.
expecting a 9% increase over the next year.
Mhm.
And then projected into the future, continued increases. So
Right.
what do you tell somebody when they say, I think I want to wait? Because we know what interest rates are right now. And we know,
I tell everyone it's an expensive proposition if you wait. If you wait, you're going to pay more. And you might pay more in home price. You might pay more in interest rate.
that's right.
Know that the interest rates are much lower right now. So here again, a 1% increase in an interest rate is equivalent to a $50,000 increase in purchase price or mortgage amount.
Oh, I hadn't heard that before, but I love that analogy. Thank you
Yes,
for
and so
sharing that.
all you have to do is let interest rates go up, and you've lost that much purchasing power based on your payment.
So if we're continuing, prices are going to continue to rise. The interest rates, are you hearing that I know no one has a crystal ball,
I wish I
but
did.
I know when we all love to have a crystal ball,
Yeah.
but are you hearing that they're projected to stay around what they are right now?
I do think that they're going to stay pretty close to where they are. Once again, we have the government involved, and the government is buying the bonds right now. They're buying mortgage-backed securities, and they're buying the 10-year bond. Part of the CARES Act is part of the, keeping the economy stimulated. That's
Right.
a great benefit. We need to take advantage of it, while we can. So I would say yes. Let's, they will go up eventually. Unfortunately, they're going to go up. But I think we've got a good run. I think we've probably got another 6 months to a year.
Okay.
Understand where they are.
Awesome.
So,
Well, thank you so much for
yeah.
sharing your wisdom and your knowledge. I just appreciate you so much. So
Well,
if
thank you.
anybody wants to contact you to ask you more information on getting a loan or mortgages or anything to do with the lending side of the business, where do they reach you at?
Yep, they can just reach me on, I like people to call my cell phone. They can just go to our website, which is directlendersllc.com. But they can call me on my cell phone. I'll answer any question to anybody. I answer day and night, 770-500-5080.
And you do answer your phone and you're always available. I love that. So
thank you. Thank you very much.
Thank you, Randy, so much for your time today, and appreciate your sharing your expertise.
Thank you for watching The Lowdown with the local market experts. You can find us online at lauramilleredwards.com, on Instagram at LME Realty, and on Facebook at LME Realty Group.